and that is implemented for the future. Sensitivity analysis is, if there is a change in the inputs, what impact does it have on the output is what is tested. Sensitivity analysis. How sensitive is the output to the changes in the input? So here it says that revise one key budget assumption and analyze the impact. So there is one at a time. There are other techniques also which take multiple changes and then observe what is the impact on the output. But then this talks about sensitivity analysis talks about taking one key variable at a time and then make a change in that to understand what is the impact of uh, these this change on the output. So after they put this to test, they understand that what is the best way in which the output can be generated. So before they finalize that, any testing which is taken up in terms of making changes to the key variables and see the impact on the output is called as sensitivity analysis. The next concept what we have is stress testing. Okay, so it says that prepare the budget for an unexpected event. Events such as changes in consumer taste, business disruptions, and competitors' actions. So multiple things are taken into consideration, and then in case if these things change and what is the impact it would have on the output. So here also the worst thing, the drastic changes are made, and then the how much can the um, organization bear that stress events, stress testing. So by making changes in various variables like changes in consumer taste, business disruption, and competitors' action, and then test it whether there will be any impact on the business, or if there is an impact on the business, how can the business cope up with those changes? That is what is about the stress testing. What are the benefits and problems? So, in fact, actually, these are not the only things what we take into consideration. There are simulations, computer simulations. Then we have the planning taken up for the future, scenario planning. Then sensitivity analysis, what if sensitivity, what if analysis. Um, they try to understand what if this changes, what if that changes, what impact will it have. So like that, when they test that, there is kind of preparedness to meet the future. So the benefits talk about better prepared for stress, understand key pressure points, and understand key assumptions. So they understand the sensitivity part of it. I mean, how much can they bear that, bear the pressure, what are the pressure points in situations when there is stress, will they be able to manage that? So they are better prepared because there's already testing taken up. So for that reason, that preparedness would be there. What are the problems? The problems with the sensitivity analysis and stress testing is, see, that it has not yet happened, but they are just testing it. So if they spend a lot of time, too much of time is spent on testing this, then it could be time consuming, very subjective. It is not that if this thing happens, the output would be that. We cannot define it in a precise manner. How would that have an impact in reality is a different thing. So it's very subjective. Not all events are foreseeable. Okay, so yes, some of the events which they can uh, expect, estimate to happen in future, so testing can be taken up. But as future is uncertain, not everything can be anticipated for the future. So that is the point what we have to remember. What are the sources of budget data? Now when budgeting is taken up, when the budgets are prepared, how do they arrive at a, let's say that if there is sales budget, how can they can they just vaguely take some figure and then start preparing that, prepare a sales budget, roughly take some amount, 50,000 units for the next month? Can it, I mean, does it work out like that? Does it happen that way? No. What are, there are various sources from which the data is taken, inputs are taken out of those sources. Certain techniques are applied, After that, the budgets are prepared. Okay. What are the sources of budget data? The base for any budget, unless and until it is zero based budgeting, the base is always past data. Extract information from the past data. What happened in the past becomes the main source. So, historical results and trends. So, whatever happened in the past, maybe with some changes, it can be anticipated for the future. Okay, so but the base is from the past. Since there is a trend in which was followed in the past, the sales would grow at 5%, 10%, something. So if that is the case, so anticipating that change to continue, the trend to continue in future as well, they can take up planning for the future. So the main source of data or information is from the past data, historical results and trends. Then the economic data. What is the scenario in the economy? Whether there are what trade cycle would be there in the future period. The other things related to the economy, the favorable points, the unfavorable points, all of them also are drawn, and based on that, the anticipation, the forecasting will be taken up. Okay, economic data. Then we see that market research. Some research also is carried out to understand the market conditions, the competitive strategies, how should they go ahead with their plan, their strategy. So market research is also helps them. Public announcements and industry analysis, some kind of an, information available in terms of maybe some reports talk about the industry would grow, there is scope for the industry, the growth is seen in the industry, or the industry is passing through a bad phase, or because of these reasons. Some kind of analysis would always be available about specific industries. So when there are public announcements and industry analysis, then accordingly they plan for the future. Big data is another concept. What is big data? The name itself says that the data is big, and that such big data is taken up for analysis. Earlier, when the data which was big had to be analyzed, it was not easy to analyze that. The techniques, the technology was not helpful, sufficient enough. Earlier, it was not possible to analyze this big data, but now with the help of big data analytics or big data analysis, it is possible. So when in the past, if the data which was the volume of the data was large, uh, the best way to analyze that was a sample was drawn out of the population, the large volume of data, and the test was taken up and the result was applied to the entire population. That is how it was done. But now with the um, with this concept being taken up, which is big data analytics, even the large volume of data over a period of time, a vast amount of data also can be taken up with the help of the software. This large volume of data is taken up to analyze. So when you study the data for a very long period of time, or when you consider a large collection of data and analyze, the result definitely would be more accurate than any other manner in which the analysis was taken up. So with the possibility of big data. With the possibility of big data analysis, um, information can be drawn and that can be used for forecasting the figures for the future. Big data. Now, what is big data analytics? Big data analytics talks about it is the gathering, collecting the information from various sources, gathering, analyzing, and using massive amounts of digital information. So, there are characteristics about these big data analysis. So, the characteristics are mentioned in 4 V's. So, here we see that these are the 4 V's. These are the characteristics. They can be looked at the benefits. They can also be looked at as problems also. What are the characteristics? Now, when the volume of data is large, we are calling it as big data. So when large volume of data is taken up, this is put to test and the trend or style structure of the data and analysis can be easily drawn for the large volume of data. But then how do they get this large volume of data? What are the various sources from which this large volume of data is collected? So we see these are the sources from the media, from the internet, from machine generated databases. Um, it is published data. Then various ways in which data is collected. That is one of the features, which is variety of data is also collected. It is in the form of quantitative, qualitative, opinions, videos, all those things are taken into consideration. Now that we see that there are so many issues about the privacy, it means that the data was the data has been captured by who are interested to get the information. So we see that variety of ways. Even the social media also provides some information. So there are various ways in which various sources from which the data is collected. So from the internet, then we see machine generated, the ones which are published, which are unpublished, views, opinions, quantitative, qualitative, all of them. The volume is large and there is variety of data. Okay, when they use large volume of data up to date, because see, even if it is not published, generally we see that publishing happens once in a while. It is not on a day to day basis, maybe once in 5 years, once in 10 years. If we are talking about census, then what do we uh, I mean, what is the pattern? For example, in our country, census is collected once in 10 years. So anybody who wants to take up any kind of analysis have to wait to for another 10 years to get the updated version. Otherwise, in between, somebody is uh, considering the that particular data, so they do not have up to data, the last published data. So until then, whatever was the last published data, so let's say suppose something is published every 5 years. So after the last publishing, even if they are up 2 years away, 3 years away also, they still have to consider whatever was the last published data. So the up to data information would not be available for them to take up any analysis. But because big data considers the unpublished data, or which is not published through an official source also, that still can be taken into consideration and then it considers that also. So there is up to date info. Okay, then velocity is the speed. We talk about velocity as the speed. What is the speed? Speed at which, now when this I mean the volume of data, when it is big, analyzing the data becomes a problem. It's the time consuming, but the softwares which are available, process the large volume of data much faster, quicker. In fact, multiple sets of large data are also simultaneously processed. So we have these softwares like Hadoop, which are useful to analyze the big data. So softwares like Hadoop and all are used to process this data. So what's the problem with that? The problem with that is availability of skill. Not everybody can not everybody is equipped with these kind of skill set to analyze that and process the data. So that becomes a problem. Then better customer knowledge, the varieties. We've discussed that it is not just one standard type of data, but from multiple sources, various ways, wherever data is available, all that data is taken up for consideration. So variety of data, so they get to understand the customer, the idea about customer knowledge is known better. So better customer knowledge. Okay, variety of data. The next one is veracity. Veracity is about the genuinity of the data. So the genuine data has to be taken into consideration. But when they are collecting multiple sources, large volumes of data or up to date information and all, in that case, they may also consider the ones which are not published. So that talks about the truthfulness or the genuinity of the data, whether it is really genuine because it is not authenticated by anyone. Therefore, that genuinity or uh, um, that concept of truthfulness, veracity comes into picture. Okay, so such data only should be considered, and if it is not considered, that becomes a problem. So it is also because they consider multiple types of data, multiple varieties, multiple sources from which variety of data is considered. So they are also kind of preparing for stress testing, easier stress testing. Okay, that is about big data. Now we're going to learn about various types of budgets. Theoretically, we need to. I already explained to you about what is a rolling budget. Is it disturbing? It is disturbing. There is no doubt about it. In my apartment, I don't know. Today, some work is going on, and it's kind of irritating and troublesome. Only. Sometime back, they stopped working, so I thought the work is done, and I was very confidently started. Let's see, as much as possible we can do, we will do. Otherwise, if it is not possible, we can close it. Let's just tell me if it is unbearable at any given point of time, I will close the class. Okay. Rolling budget, the next one is rolling budget. um, Budgets are prepared for the future. So generally, budgets are prepared for quite considerably a longer period of time, at least for 1 year period. For some of the budgets, it's prepared like that. Some of the budgets are even for as small as a period as 1 week. Also, budgets are prepared. So if they have to estimate the cash requirement, they can go down to prepare as short as a period as 1 week. Also, 1 week, 1 month, 1 quarter, 1 year. Where varieties of budgets according to the time period and the requirement, the time period is selected. But in certain industries, if they take if they prepare budget for a longer period of time, then in that industry, they anticipate changes to happen very frequently. Maybe because of technological advancements that they things are not the same. Okay, so in case of mobiles, they say that mobile phone gets updated every 2 months in every 2 months. So that's quite quick. Okay, some fashion industry, they say that by the time you go get your fashion apparels, then by the time you come home, it changes. So we see that some of the industries, they are quite very quickly, very fast changing. In case of certain businesses which are seasonal, the anticipation for a longer period of time, like 1 year or one full quarter, also sometimes may become a problem. So in that case, instead of having one um, consolidated or one total for the total period one budget, that budget is split into multiple periods. The multiple periods part of it is, let's say that if in a year there are 4 quarters, so the budgets are prepared for separately for 4 quarters. Instead of having 1 year, they would prepare for quarter 1, then quarter 2, quarter 3, and quarter 4. So in this particular fashion, budgets are prepared and included in the same budget. Now, though the period is split, yet these periods, the smaller periods of time, they are all included in the same budget. Then let's say the first period um, lapses. In that case, the first period is dropped down. Okay, then another similar period, that would be this next year first quarter. If this expires, let's say that the first period lapses, it expires, then this budget is no longer needed because the time has passed, and this budget has to be dropped. This period's budget has to be dropped. When this is dropped, another similar period for which the budget is prepared and it is included. So at any given point of time, it's like they would have whatever is the time period. Let's say if they are considering a time period of 1 year, so at any given point of time, they would have a budget for one full year. Okay, that is continuously updating their budget. So anticipating for short, smaller periods of time and including in the budget. So the forecasting part of it can be taken up very easily. So instead of having all that which would happen during one full year, rather they can put it as I mean, short periods, which is 4 quarters. They are prepared and they are included in one budget. Okay, so because they have to continuously update, it's also called as the continuous budget, rolling budget or continuous budget. It says that it is continuously updated after each previous accounting period, like either it is month or quarter. When it expires, that period budget is dropped from the budget, and another similar period for which the budget is prepared and added. So this is also known as continuous budgets. These are prepared for fixed periods, not necessarily a full financial year. So it's not necessary, it's always. It could be as short as take 1 quarter. So for 1 quarter, in a quarter there are 3 months. So they can have the budget for the first month, second month, third month. In that particular, there is nothing like a one full financial year should be taken, or there is no such rule. Whatever is their requirement, whatever is the time period which they consider for which the budget should be prepared, they take into consideration accordingly. What are the advantages of rolling budget? It reduces the uncertainty, because a longer period of time holds that uncertainty, because future is uncertain. Anticipating it for a very long period of time may not be a very good idea. So that period is made into shorter periods, and then they anticipate, then they can accommodate all those changes which are anticipated into the budget. Then it can be used for cash management, force managers to look ahead continuously. They can keep observing what are the changes, accommodate those changes into the budget. Okay, so those are the advantages of rolling budget. What are the disadvantages of rolling budget? It is time consuming. Okay, because all the time they have to be on the work of observing, updating the budgets. So it's time consuming. Frequent budget changes are difficult to communicate. Whenever they make a change, then budgeting, one of the important points of budgeting or the characteristics of budgeting is budgets are communicated. When they are communicated, then that coordination is possible. So whenever they keep making changes, they again have to communicate that. So that becomes a difficult task, and those who are involved in implementation, for them also it can be a little confusing about these changes which are made very frequently. Okay, frequent budget changes are difficult to communicate. Next one is incremental budgeting. The normal way of preparing budgets is by way of incremental budgeting. That is, they the budgets are prepared based on whatever happened in the past. So the past period is taken, the past data, the budgets from the past periods are taken as the base. Then, considering that whatever incremental changes are anticipated, those changes are accommodated into the budget. Then that budget is called as an incremental budget. So, this normally this is the method of preparing budgets, uh, because there is already a budget which is in place, which is already prepared, which was implemented in the past. Therefore, take the insights from those budgets, but the past to be repeated in future need not happen. So what changes are they anticipating? Let's say that in the past they have sold 10,000 units per month. Maybe now they can sell to 12,000 units per month. So that incremental change of 2,000 units, that has to be accommodated. So the budget has to be revised according to the incremental changes. Okay. This is the most common way of preparing budget. So this is the traditional approach to budgeting, because already something is already prepared and is available. Then it says that it takes previous year's budget and adjusts for inflation, changes in volume, staffing levels, etc. What are the advantages? It is simple and cheap, suitable in stable environments when not much changes are anticipated. They can go with this type of budgeting, incremental budgeting. The disadvantages are it is backward looking. Then builds on previous inefficiencies. That is one very important thing. It says that in the past, if they have prepared the budget and there were certain inefficiencies included in the budget, those things will creep into the future as well, because they are taking that to be as the base. So the base budget, if it has certain additional amounts, excess amounts, not properly controlled costs are included in that, so that they will continue into the future as well. So that is a disadvantage. So builds on previous inefficiencies. Then it encourages overspending, because in the past period when they have included inefficiencies and they could get away very well with those inefficiencies, that will continue in the future as well, and that control concept doesn't work out. Encourages overspending. Contradicting to incremental budgeting is zero based budgeting. So there we have taken the base to be the past data, past information. Past data was taken as the base, and changes were whatever anticipated changes were there, those changes were incorporated. That's how the incremental budgeting works out. But we saw there are certain disadvantages, like um, past inefficiencies are continued in the future. There is no proper cost control, because excess costs were included in the past period. So now also that will be continued to spend, and there is no proper way to control these costs. Then when there are inefficiencies in the past, that will also continue into the future. So therefore, there is another budgeting system which is called as zero based budgeting. What is zero based budgeting? The base is taken as zero, which means that nothing is assumed or nothing is taken to be as the base from the past. Every variable in the budget is freshly calculated, anticipated, assessed, included in the budget, and it is also justified. Why is this the right amount of budget? So that's zero based budgeting. Budget which is dependent on no other past data. So they start from scratch. They take zero as the base and start from scratch. So zero based budgeting is the opposite of incremental budgeting. So together we study. Whenever we study incremental budgeting, so in contrast to that is zero based budgeting. The purpose of zero based budgeting is to rest the clock every year. Managers need to build a budget from scratch and justify their spending if as if no baseline existed. So uh, that has to be taken up um, through thorough research. They cannot just include any figure, because the ones who are involved in preparing the budget also needs to justify why these amounts are included in the budget. So that justification has to happen there. When the justification has to happen, then they are extra cautious, and then they take proper care in anticipating the figures to be included in the budget. Resources are not necessarily allocated in accordance with previous patterns. So obviously, when they are not even assuming any past data, now they have to um, freshly anticipate everything. So the resource allocation based on the past, it doesn't exist in the first place. Now, how does zero-based budgeting take place, or what are the various stages? First, identification of decision units, development of decision packages, review and ranking of decision packages. So, what are the components for which the budgets have to be, the budgeted figures have to be prepared? Then, the various variables for which the amounts have to be prepared. Work out on that. Thorough research about those variables or those factors have to be taken up. After that, they are analyzed, and accordingly they are included into the zero-based budgeting. The advantage of it is there is efficiency. There is no inefficiency which gets into the current period based on the past inefficiency. So now um, it is more authentic, more genuine. Okay, so the benefits out of that is there is improved accuracy, improved utilization, justified changes. The disadvantages is time taking, because every time you have to be involved in I mean, analyzing and assessing what should be the amount. For that, the research which has to be taken up is all time consuming, costly. It is expensive, difficult, and time consuming. That those are the disadvantages of zero based budgeting. But then it is also advised that it's not on a very regular basis. Once in a while, once in 5 years, if they go for zero based budgeting, so then they get a chance to verify if there are any unnecessary costs or expensive items which are included into the budget. So that part of it can be taken up. So that we also observe this kind of budgeting in government. Whenever there is change in government, the new government does not take up whatever was planned by the previous government. So they keep changing. They change the budget and then freshly anticipate everything according to what is their plan. Okay. So This works out in government organizations and with governments. Whenever there is a change in government, they go for zero based budgeting. But it is also advised that in private organizations also, once in a while. So how frequently depends upon um, to what extent it is um, efficient to apply the past data, or if there is a need to bring about a change. So it depends from um, business to business, organization to organization, as to how frequently they would go for zero based budgeting. Right? These are the benefits and problems of zero based budgeting. Then activity based budgeting. There was one question in between also. I said, let's not do that one, and um, let's understand what is activity based budgeting first, and then only we'll take up the question related to activity based budgeting. The concept is the same as what we have learned under ABC. We've learned about ABC, isn't it? Activity based costing. This is very useful in terms of overhead allocation. So whenever overheads have to be allocated, the better way, the most precise way of allocating overheads is based on the activities. Identify the activities, uh, identify the amounts, identify the cost drivers. I mean, pool up the cost amounts, pool up the cost amounts, and based on the cost drivers, cost driver is the usage of a variable. Allocate these overhead costs, and then find out what is the right amount of cost. That is what is the concept of activity based costing. So very useful in case of overhead cost. Now the same principle, the same concept is applied even in budgeting. So when they are forecasting the figures for the future, if it is a variable cost, if the items are variable costs, anticipating variable cost or fixed cost is not an issue. Fixed cost would remain the same. Variable cost varies proportionately. But the one which is semi-variable or which is an indirect cost, anticipating that would be a problem. How much would be the cost for the future? How do we anticipate that? So in such situations where the overhead cost has to be anticipated for the future, at that time activity based budgeting is taken up. So what is this? Let's see. A method of budgeting based on an activity framework and utilizing cost driver data in the budget setting and variance feedback processes. Okay, so it says that, let's try to understand what is this concept. It's a method of budget based on an activity framework utilizing cost drivers. That is the cost usage. What are cost drivers? The usage or the volume of activity for that particular variable. That is cost driver. We have also worked out a few questions on activity based costing. Okay. Utilizing cost driver data in the budget setting and various feedback processes. First thing is the cost driver is identified. Whatever is the usage of this cost driver, accordingly the amounts are forecasted. A forecast is made of the number of units of the cost. The activity cost is estimated. So here also, first the anticipation, the same principle, the same concept there in actual terms, how to allocate that. Here in these are anticipated activities. Let's say that how many times repairs would be needed. So anticipate the number of repairs, anticipate the repair cost, anticipate how many repairs are used by each product. The usage part of it is also taken into consideration. Okay. After that, according to the usage, the amounts are allocated. So everything is anticipated. The cost driver, the usage of cost driver, the estimated amount and allocation of estimated amount. What are the benefits and the problems? The benefits are there would be better overhead cost control, useful when overheads are significant. See, overheads allocation is a very important thing. We have studied already. That is when the overheads are not appropriately allocated, then in that case we see that the costs are either overcharged or undercharged, and that can have a impact on the selling price. The selling price can be overpriced or underpriced. So we saw that what is the impact it has on cost allocation, what is the impact it has on price setting. So, but then when it is done with the help of ABC, appropriate way of allocation of overhead costs, the costs which are charged, the costs which are charged are appropriate, right amounts, and then it also helps in deciding the other variables like pricing, part of selling price, those things. So better overhead cost control useful when overheads are significant. That is, a major part of the total cost is overheads. In that case, it is very important that they allocate the overheads appropriately. Then what are the problems? Like we have earlier also discussed, the problems are it's time taking, it is expensive. Okay. Then in case of budgeting, they must be using the activity based costing and the principles of activity based costing. So only when that happens, it is possible for them to go for activity based budgeting. And very useful only when the overhead costs are significant. That is, a major part of the total cost is overheads. If it is not significant, the whole process is a wasteful process. So not, I mean, sometimes overhead costs are only a small portion in the total cost. In that case, why go for such a process which is time taking, um, which is expensive? All this thing is not needed. Beyond budgeting, it says that greater use of rolling budgets, greater use of non-financial targets, then innovation is encouraged and rewarded. Budgets are set locally. So the the technical part of budgeting goes as anticipating the figures for the future and implementing that. So we see the um, we've seen the um, budget cycle. The budget cycle talks about anticipating um, for the future. The approval is given by the top management. The implementation is taken up. On implementation, the monitoring happens. Then there is observation of what is the planned figures, what are the actual figures, and on observing that the implementation is not on par with the planning, the variations are noted down. After the variations are noted down, after the variations are noted down, then measures are taken. When variations are noted down, measures are taken to correct the variations, and if needed, the budget has to be revised. That is the traditional procedure of the entire process of budgeting, preparing budgets. So, conventional way is that, but beyond budgeting, it says that use greater amounts of uh, rolling budgets. That is also ensure that very frequently they keep preparing the rolling budgets. Apart from the financial targets, also non-financial targets should be prepared. Um, Non-financial targets, like all the time, instead of only focusing on profit, sales, and all, they should also focus on satisfying the customer, satisfy or achieving the efficiency, productivity, quality, um, then employee welfare, employee skill development. These other areas also should be focused. It is not always about looking at what are the targets which have to be achieved, but then they should also think about other aspects, that is other non-financial targets. Just a minute. Okay. So apart from thinking non-financial targets, they should also think about innovation and other things. It's not always in the conventional way of planning something, implementing that, but more than that, they should also think about how they can take up innovation and come out with newer things, and then even if it is not planned, also being able to come out with solutions for the changes scenario. Set budgets locally. Budget should be set locally for that particular requirement, for that particular immediate situation also. What are the advantages? Advantages of going beyond budgeting is planning is continuous, challenging targets would be there. It encourages innovation and improvement, better local manager involvement. But what are the disadvantages? Is kind of complex. When everything is in set and in place, then facing that becomes much more easier. But then if it is not, if it has to be spontaneously taken up, it is challenging. But people who love challenges, for them it may be motivating. But some of them who would prefer to work in a planned environment, everything is set in place. For them, it may not be motivating to them. Okay, it becomes difficult for them to cope up with the changes which take place. So, facing those changes for them may be very difficult. So, it is complex, it is expensive, coordination is tougher. Otherwise, when plans were there, everybody understood what the plan was and how to implement those plans. But now, because there is no plan, when there is no plan, then they have to react very quickly. Okay, they have to use their judgment and take the right decision. So that is a difficult task. So coordination is tougher, potential loss of goal congruence, then everybody starts taking decisions. So going in the same direction becomes difficult. Maybe they do not understand what is the organization objective which has to be achieved. So that goal congruence becomes a difficult task. Potential loss of goal congruence, tougher for staff. That is going beyond budgeting. I explained to you about what is the concept of budgetary control. What is budget? Is a financial plan which includes incomes, expenses, assets, and liabilities. Is a budget. Budgeting is the process of preparing budgets. Budgetary control is with the help of budgets. When control measures are taken up, we call that to be as budgetary control. Okay. Now, how does it happen? How does it work out? Is what we will look into. What are the various types of budgets? We see that top down budget, bottom up budget, then the feedback about having a control. Control is possible when a feedback is given, and feedback is given on monitoring. So when they monitor that, a feedback is given. On receiving the feedback, accordingly the decisions are taken. So the budgetary control mechanism works as feedback. Feedback is collected, feedback, feed forward. We will discuss about what are these terms. Then we have something called as responsibility accounting and the ethics in budgeting. Is my voice coming?
Yes.
Just to ensure. Okay. What is the responsibility? What is responsibility accounting? So what are responsibility centers is what we will. What is responsibility accounting? Responsibility accounting attempts to associate costs, revenues, assets, and liabilities with the managers most capable of controlling them. In um, when we put it across with the managers, so there is someone who's appointed to look into the financial aspects. So the manager has to plan for the financial aspects, that is in terms of costs, revenues, assets, and liabilities. The planning has to be taken up, and the manager um, is given some authority to plan. So that is very important. Based on the authority, when he takes the decision. So who can take decisions? Only those that have the ability to take decisions. So the capable ones are appointed as managers. So the accounting part of it, which accounts for the planned events, planning for the future. So the manager is responsible for the planned events, and also when they actually happen, the actual events are also recorded. So responsibility accounting takes care of the planned events and the actual events. The planned events are planned by the managers who have the ability to take decisions for the future based on the authority which is assigned to the managers. The managers take decisions, and that's it. That is not all about responsibility accounting, but it goes further. And when the decisions are taken at the time of implementation, he is also answerable, or he is also responsible for the decisions he has taken. So he becomes answerable, he becomes responsible for the planned events. So it is about the planned events and also the actual events. So the accounting of the activities of the manager for the future, as well as the accountability when the implementation takes place. Responsibility accounting distinguishes between controllable and uncontrollable costs. So here we have to understand the difference between these two types of costs, because when we are saying that the responsibility lies with the manager, to what extent is the responsibility or he is made responsible, that we have to understand. So the evaluation, when it is taken up, at that time we have to understand the classification of the costs. That is, what are the costs which are controllable, what are the costs which are not controllable. That part we will look into what is the difference between controllable and uncontrollable costs. Controllability principle. Managers should only be held accountable for costs over which they have some influence for results they can control. Then difficult to apply in principle because of jointly earned revenues. What are controllable costs? Because of a decision taken by a manager, if he can control the cost, we call such costs as controllable costs. In spite of a decision taking by the manager, if the costs are not controlled, then we call them as uncontrollable costs. Normally, what do you think are the uncontrollable costs? Any example?
Fixed costs.
Fixed cost. We understand that fixed cost is not controllable. Okay, so the fixed to cost part of it, um, a portion of the fixed cost, we call that to be as traceable fixed cost. So when an activity is shut down or suspended or reduced, then we see that even in case of fixed cost also, a portion of the fixed cost becomes controllable. So such fixed costs are called as traceable fixed costs. Traceable fixed costs. What are traceable fixed costs? For example, let's say that um, they have reduced the amount of activity, the production part of it, or if they were producing 4 products, now they would henceforth produce only 2 products. So some level of activity, some activity in the organization is reduced. So in such cases, we see that by nature, those costs which are fixed cost, a part of it also can be avoided. Let's say that in case of reducing the activity, let's say um, if they have hired a bigger premises, now they no longer would want a bigger premises, so they can move into a smaller premises. Factory rent, which is paid by nature, is a fixed cost. So the amount of fixed cost now can be reduced. A portion of the fixed cost can be eliminated. Let's say that 2 supervisors were there to supervise the activity. Now, because of reduced activity, now only one supervisor is needed. Supervisor salary by nature is fixed cost, but the total amount of supervisor salary is also reduced. So we see that even under fixed cost also, there is an amount of fixed cost which is traceable. So variable cost by nature is controllable. When the decision is to reduce the activity, the variable cost also is reduced. If it is increased, the cost increases. So what are controllable costs? If we talk about these two things, that is the variable cost and the traceable fixed cost, these two are controllable costs. Then the fixed cost which is uncontrollable, which is unavoidable, basically unavoidable fixed cost is uncontrollable cost. So what are the unavoidable costs? Like, what are the unavoidable fixed costs? We can see that, let's say in the past they have taken decisions. Um, for example, when assets are purchased, the commitment is made on the date of purchase to provide for depreciation. So in the past, a decision was taken, a commitment was made to provide depreciation. Even if the manager takes a decision of reducing the activity, still depreciation cost would be the same. It would not vary, it would not alter. So that is not in the purview of the manager's decision making ability. It is not covered under his purview. Therefore, if the costs are not controlled, he cannot be held responsible. So that's the concept. Then we under unavoidable costs, we see that we have the category of committed costs, committed fixed costs. Then there are certain costs which are jointly, combinedly incurred in the organization, like establishment charges, like top management salaries, um, some costs which are combinedly incurred. Then what is done with that joint costs? What is done with that is, they are just allocated. It has nothing to do with the decision of the manager. It is just allocated, and the department has to take up those costs because they have to uh, absorb this cost, and the revenue generated by these departments should absorb these fixed costs, which are allocated costs. Can the manager do anything about the allocated fixed cost? No, it is not uh, he who decides about how much of the allocated cost should be taken up. It is decided by the top management as to how much should be the share of these joint costs which have to be allocated to each department. Okay, so basically we see that these are unavoidable fixed costs. The manager cannot do anything about that. He just has to, the department has to just receive these costs and account it for in the income statement. So the responsibility accounting distinguishes between controllable and uncontrollable costs. Controllability principle says managers should only be held accountable for costs over which they have some influence. For rest, they can, for results, they can control. So the responsibility should be restricted or subject to the variable cost and the traceable fixed cost. Difficult to apply in principle because of jointly earned revenues and or jointly incurred costs and arbitrary accounting procedures. So in reality, it is very difficult to say that these are not under his purview. Even if they are not under his purview, the department, the revenue which is generated by the department should take care of these costs. These are the costs which are incurred by the organization. So they have to be allocated, they have to be charged. They are commitments made in the past and they have to adhere to. So there is nothing like the controllability. See, it may not be under the purview of the manager, but yet the revenue should generator should be high enough to absorb these costs. So we cannot simply say that these costs are not this cost should not be taken for evaluation. So that doesn't work out. Okay, so it is difficult because the organization has to bear these costs, and when there is decentralization and there is division into responsibility centers, they have to take up the responsibility of bearing these costs also. What are the examples? There are examples of controllable costs and uncontrollable costs. I hope it's clear. Most variable costs are controllable in the short term. A portion of fixed cost can be controllable. For example, certain advertising spent specifically for a given department would be an expense controllable by the manager of that department. If it is exclusively for them, so the decision lies with them about whether to incur that expenditure or not. So it is in their purview. The manager can decide about to go ahead with that advertisement amount or not. So advertisement cost by nature is fixed cost. So the decision to incur or not to incur lies with the manager. So then it is called as a controllable cost. What are uncontrollable costs? Committed fixed costs, advertisement expenses that benefit many departments or products are uncontrollable costs. So in that case, that is just allocated. Increase in expenses due to inflation, apportioned head office overhead costs. Okay. Short term and long term difference. Some costs are controllable in the long run, but not in the short run. A building with a 10-year lease is not controllable in the short run, but once the lease is signed, the payments must be made until the lease expires. Okay. These costs are controllable at the time the lease is negotiated. Then they can decide about whether to go ahead with the lease or not. So the time factor also decides about whether the costs are controllable or non-controllable. Then we have feedback controls and feed forward controls. So let's see what are feedback controls and feed forward controls. See, when control measures are exercised, we are talking about budgetary control, isn't it? So when control measures are exercised in an organization, okay, then one way of controls is by way of feedback control. Feedback is looking into the past and providing some feedback, and that can act as a control mechanism. So feedback is the comparison of ex post actual results with ex ante expected results. So the past data and the future things. So when they are compared, ex post actual results against ex ante expected results. And if there is a difference, it is investigated and corrected. It is a response providing useful information or guidelines for further actions on budgets, for example. So here the loop works like this. And for actually the loop is we have looked into as a cycle. Let's look into that one. Um, the budget is prepared. The budget is compared with the actual activity. Okay. So when a budget is prepared and the actual activity which takes place, these two things are compared. That is the comparison. When comparison takes place, Then if there are anything which is not on par with the budget, if the actual activity is not on par with the budget, then they look into the reasons, examining the variations, examining the variances, and according I mean based on the variances, if there is a possibility, if there is a possibility of taking corrective action, they take corrective action and correct the variances, or they can also go ahead and revise the budget. Sometimes they may take up both of them. So this is about the feedback loop in the control system. So what is feedback loop? They are comparing the ex post actual result with the ex ante expected result. Expected result is budget. Actual results are the actual activity. So these two things are compared, and whatever is the possible course of action which has to be taken up to correct the deviations, they are corrected. Sometimes it is also to look into the feasibility of implementing a budget. If it is not possible to implement a budget, then budget also is revised. It says that corrective actions that brings actual performance closer to the target is called as negative feedback. Corrective action that increases the difference between actual performance or the target plan is called as positive feedback. Variance analysis is a form of feedback control. Budgetary control systems are feedback control systems. What are the disadvantages of feedback control? They are reactive and backward looking. So backward looking is they are not depending on what is actually happening. They're comparing the actual performance with what they have planned in the past. Okay. Disadvantages of feedback control are they are reactive and backward looking. Another thing is feed forward control. Feed forward control is they're not depending on the past data, but they're foreseeing what can happen in future. Feed forward control is the comparison of the original targets or the actual results with the forecast of future results. Okay. Examples of feed forward control. First one is um, the cash budget. Okay. I think the font is clear. Just a minute. Sorry, some disturbance. Just a minute. I'll get back to you. Okay. Sorry about it. Um, Feed forward control. Example we were discussing. Sorry. January 1 cash budget states that there would be a cash balance of 400,000 at the beginning of June and a machine costing 320 is to be purchased in the month. April 1 revised cash budget for June 1 states cash balance is equal to 220 on June 1. April 1 eliminate cash flow problem before it occurs by delaying purchase, negotiating installments or agreeing overdraft with the bank. So we didn't do a full-fledged problem, but then yesterday when I was explaining, sometime I was explaining about the cash budget concept. I told you that there are three different sections. The sections are, first we have to assess what are the cash receipts, what are the cash payments, total it up, and then whatever is the requirement of finance, if there is any deficit, the financing part of it has to be taken up. They make an arrangement, so everything is looked into the future. They are not depending on the past. Feedback control depends on what happened, I mean in the past. Take that as the base, prepare a budget, then when the implementation happens, the actual activities compared with the past data. Here there is nothing about the past, but they are looking into the future, forward looking, and the transactions for the future would take up in this particular manner. Therefore, as on that particular date, if there would be a shortage or a deficit, it has to be taken up like this. Is about feed forward control, looking into the future. They're not depending on the past plan which is prepared, but now the focus is on what can happen in the future, the possible activities which can happen in the future. Forward looking, feed forward control. So here the example they talk about on January 1, what are they anticipating? A cash balance of 400,000 at the beginning of June. So that is what they are anticipating, and they would also be purchasing a machine costing 320,000 during that month. Then when it comes to April 1, they are revising the cash budget, revised cash budget for June 1 states cash balance would be 220,000. So if that is the case, so there is a difference here. The balance, cash balance of 400,000 at the beginning, but maybe because something happened during that particular period, now their cash balance as on June 1 stands at 220,000. So quickly they can take measures to arrange for whatever is the deficit which arises. So if there is a deficit which arises, then they can take measures of making arrangements. So that is looking forward, looking into the future and taking actions. And if there is something else which happens, then in that case they can also react to whatever is the change the situation. Advantages of feed forward controls are they're proactive and forward looking. This is another important concept, like we have learned about incremental budgeting and zero based budgeting as contrast to each other. We have now fixed budget and flexible budget. What is a fixed budget? It says fixed budget is a The criteria here would be the activity level. For a fixed activity level, when a budget is prepared, we call that as fixed budget. But in future, the same activity has to happen is not a necessity. It is not that whatever is planned will happen in the future. There can be some change, some variation in what the actual activity would happen. So a budget which is prepared to accommodate the change scenario in the future, we call that as a flexible budget. Let's say that they have anticipated that the sales would be 50,000 units. If 50,000 units would be sold, is what is the anticipation? A budget which is prepared at 50,000 units activity level is a fixed budget. But we have also understood that I didn't explain about risk, no? Okay. So if at the time of expecting the future, if they anticipate there would be some variation. So right at the time of planning itself, they see that there is a chance that they may be able to sell more than 50,000. They can end up selling 60,000, or some unfavorable thing happens and their sales can also drop down to 40,000. So like that, if they also see that there is a variation which can happen in future, the budget which is prepared at multiple activity levels. So if they're anticipating 40, 45, 50, 55, 60, so like that, whatever are the most possible things which can happen, or for all those activity levels, the budgeted figures are prepared and included in a flexible budget. When the actual happens, the appropriate activity level is selected from the budget and taken up for comparison. So these two are compared and the rest of it follows. So that's a flexible budget. Sometimes, let's say, even after including multiple activity levels, when the actual happens, it is not at any of the activity levels. So what do they do? Like what we have done in variance analysis, what did we do? We have revised the budgets. So the standards were adjusted according to the actual output, actual activity level. That is what would be done. So after observing what is the actual activity level, then the budget, when it is adjusted according to the actual activity level, we call such a budget as flexible budget. Fixed budget and flexible budget. Fixed budget is fixed at a fixed level of activity, the budget is prepared. It is useful only when the actual activity is on par with the budgeted level. But if there is any variation, then it is of no use. The whole process of planning, preparing plan becomes a waste. Therefore, we have another type of budget which is called as flexible budget, which includes number of different levels of activity. This type of budget provides two key benefits. Managers are better prepared for a range of scenarios. So So what if sales are only 45, 50, 60, 65, multiple scenarios happening, multiple activity levels. When they happen, what would be the situation? They are prepared, well prepared. So managers are better prepared for a range of scenarios. Variances can be based on the most suitable budget. At the time of budget cycle, at the beginning, I explained to you about the concept of how the budgets are prepared. Budgets are prepared um, in two different ways. Here we see that it is top-down budget. Then we also have another one which is called as bottom-up, or also called as participative budget. So today's class we will do these two types of budgets, and we'll end the class here. The first one is top-down. So from the top, it's coming down. So at the top level, the budget is prepared and it is communicated to down. So that is top-down budget. So there's another name for this one also called as authoritative style of budget. So the who has the authority? The top management has the authority. So they, without consulting any other level of management, when the budget is prepared, finalized, and it is communicated to other levels of management. What do you think is the advantage? What do you think is the disadvantage? Do you see any advantage? I hope I'm audible. The advantage is, I hope you're listening to me. It is a theory class, so
Yes, ma'am.
yeah.
Yes.
Okay. Uh, the advantage is it is simple. It is easy to prepare. They don't have to spend a lot of time discussing, negotiating in various rounds of discussion. All that is not needed. It is simple. It is prepared by the top management. It is communicated, and then it is implemented. So easy, and for organizations which are small in size and structure, not complex activities are carried on. Um, the management understands the ability, skills of the other levels of management. In that case, there is no need or there's no point in having discussions about what should be included in the budget. When they understand about the organization, in such situations, it is very useful. It is time saving. It is they need not spend a lot of amount, and in a simple manner budgets are prepared and they are implemented. So advantages are involving managers in setting the budgets is more time consuming, so the time will not be consumed. Then managers may not have the skills or motivation to participate usefully in the budgeting process. Senior managers have the better overall view of the company and its resources and may be better placed. Senior managers are also aware of the long-term strategic objectives of the organization. Since they can see what would happen in the long run, when they can foresee things properly, so they can take up the planning also accordingly. Managers may build budgetary slack. So slack I have explained to you. I explained to you about the concept of slack, no? So there would be no slack included in the authoritative style of budget. Disadvantages are it is demotivating. If the ones who are involved in implementation, they don't find it motivating to implement a budget wherein their feedback is not included. Okay, so when they are not motivated, they do not take the ownership of the budget, and they do not implement it very seriously. They do not take it up seriously. So that is a disadvantage of authoritative style. May feel in dissatisfaction, defensiveness, and low morale among individuals because their opinion is not considered, it is not counted for budget preparation. And reduce the feeling of teamwork, may limit the acceptance of the stated goals and objectives. That ownership is not taken up by the employees. So they do not show interest in implementing that. Then limit the communication process among employees and management, may create a view of the budget as a punitive device, may result in unachievable budgets. So there is another possibility. If the top management is not looking at or considering the practicality, they are not taking the feedback from the operational level and the middle level and the operational level. So they do not understand the problems which are faced at the time of implementation. So without knowing that, if they decide the targets, so in reality, it may be a budget which is practically not possible to implement that. So it then they that kind of budget can also include unachievable targets because the feedback from the other levels of management is not counted at all. May stifle the initiative or lower level managers. The other factors like um, if for international divisions, if local operating and political environments are not adequately considered because they are not taking the view of anyone else. It is the top management deciding about what should be there in the budget, communicating that, and that has to be implemented. So there are disadvantages also. The other alternative is having a participatory style of budget. What is a participatory style of budget? Wherein the various levels of management come together, they give their feedback about what should be included in the budget, and when the budget is prepared, that is called as a participative budgeting. So participating level of budgeting, the people at the operating level, they are the ones who implement, they contribute their feedback to the top management. So it goes as bottom up. And finally, the approval part of it is there with the top management. They are the ones who approve that. But yes, they consider the opinion of other levels of management. Participative budgeting talks about a budgeting system in which all budget holders are given the opportunity to participate in setting their own budgets. Morale of management is improved. They feel their opinion is valued. Managers are more likely to accept the plans if they are involved in setting them. Lower lower level managers are more may have more detailed knowledge because they are the ones who are implementing the plans. So they have better knowledge about what is feasible, what is possible to be implemented, have more detailed knowledge of their particular part of the business than senior managers. The disadvantages are it is time taking. It is time taking and there could be budget slack. The disadvantages of participative budgets mirror the advantages of the imposed budget style. So whatever was there as the advantage part of it, here can become as a disadvantage. So here, um, because the advantage there is less time taking, here it is more time taking. Okay, then the slack can be there. Okay, um, inefficiencies can be included. All that becomes a disadvantage here in case of participative style of budget. The last topic theoretically, of course, we are not ending the budgeting part of it today. We will spend one more day because in between there are many numerical questions also which are there. because they are randomly scattered. So I I left in between some of the questions stating that this topic is not done, this topic is not done. Now that with the last topic, ethics in budgeting, if we finish this one, then we'll go question by question and then check on what are the remaining questions and finish it of all the numerical questions before we can move to the next topic. Okay, so that we'll take it up on Monday. Tomorrow you don't have a class, so you know that, I guess. Are you aware of that?
Yes, ma'am.
Yeah. Okay. So Monday we will meet and then we can take up the questions which are there in the exam kit. What are the ethical impacts of budgeting? What are the potential issues? Conflicting objectives for budget holders and setters. Undue pressure on the budget holder. Unethical practices to achieve targets. False representation of um, results. Possible implications are failure to achieve organizational goals, damage to reputation, false information for investors, loss of staff, or demotivation. The potential issues which are about the during the negotiation process, agreeing upon certain thing is a big issue. So there would be a conflict arising between who approves the budget and who's contributing the feedback. So in the process of contributing their feedback, they can also include a slack into the budget. And when it is not approved by the top management, there arises a conflict. So we see that there are conflicts which can arise because of the participation, because of the decision uh, discussion based decisions. So on account of that, conflicts can arise. Then when the budgets are imposed on the um, operational level, who have to implement that, they may also feel the pressure. They may feel that the targets are set for them, which may not be feasible to achieve. So then they may feel that pressure of implementing those types of budgets. Unethical practices to achieve targets. If it is an authoritative style, if the targets are set for the employees, for the other levels of management, and the performance evaluation is based on the targets which are set. In that case, there is a possibility that they can adopt unethical practices to increase their sales, to increase the profitability. What is not acceptable, what is unethical, also can be taken up by the employees. So, because of that pressure which is laid on the employees, they can take up the unethical practices to achieve their targets. They can also project false results. Okay, false representation of results also can be a possibility. Then the possible implications are, if the pressure is there on them, they feel demotivated, or if the incentives are not appropriate, or the recognition is not there for the targets which are achieved, they feel demotivated. Maybe they feel that it is not possible to achieve anything, or even if they achieve anything, um, it is not recognized. They do not even put any effort to achieve the targets. So failure to achieve the organizational goals, then it can cause some damage to the reputation of the business. False information can be passed on to the investors. Then they may lose the staff, or it can act as a demotivating factor for the employees. So that's the last topic in budgeting theoretically. So we have run through these slides. So um,
Ma'am,
yeah,
ma'am, could you explain Slack once again, ma'am? I didn't understand.
slab.
Yes, ma'am.
I explained that with an example. So let's take that example only. Let's see that participatory style of budget collects the feedback of the other levels of management. let's say for a new, sorry, um, the participative style of budgeting takes the feedback from the employees. Let's say for a particular activity, to take up an activity, if the actual cost which would be incurred, um, let's put it as a figure called as 50,000. A simple example, let's take it. Now, if the employee contributes this feedback and then mentions that the cost of that activity is 50,000, so it would be included in that, and then uh, later on when the implementation takes place, at that time his actual performance. Now, this is a feedback based on which the budget is prepared. But at the time of implementation, now he would be conscious that if he does not spend amount which is 50,000 or less than 50,000, in future, at the time of examining the implementation versus the budget, any error or any mistake or any amount of overspending, it can act as a negative variance against him, negative evaluation against him. He would be evaluated because he is the one who is asked for the feedback. When he contributes this amount as 50,000, he has to take care of spending it only to the extent of 50,000, because there would be an evaluation in future, the comparison of actual and budgeted figures at the time of contributing the feedback itself, because there's participation allowed. If at all, if the employee ends up giving a feedback of 52, then he need not put in additional effort to see that the costs are all in control, and he spends um, the amount of cost within 50,000. He need not be. Now he can be relaxed because he's contributed as 52, but knows that it is only 50. So even when he spends not putting in additional effort to cut down the cost and spends as 51 also, he still will be evaluated well, because the budget, it says it is 52 and he has spent only 51. So what is happening in this process? The employees set very loose standards. They do not um, go ahead and then decide about the standards in the right sense, but loose standards are contributed. They are included in the budgets. Then there is no efficiency from the employees which is taken into consideration. They do not have to put in efforts to cut down on the cost. Cost control is not possible. That is inefficiency. That is inclusion of inefficiency into budget, which becomes possible because of participative style, because they understand that their performance would be evaluated in future, and if whatever they contribute as feedback, as standards, and as against that only their performance will be evaluated. Therefore they include loose standards. So including inefficiencies, including loose standards, including higher costs in the budget is budget slack.
Yes, ma'am, I understood.
Yeah. Okay. That was a very long boring theory class. Um, but now we'll take up the questions Monday, not today. Monday we'll take up the questions because all the content is done at one go. So we will take up the question by question. Every possible numerical question we can finish it off. I mean, how much ever time it requires, we'll take it up that. The numerical MCQs, I'm leaving it for the moment. At the end, the entire exam kit theoretical questions in a discussion mode, we will end it up as a revision. Okay. So we'll end the class now.